Good morning. Today is Friday, December the 16th. The time right now in Hong Kong is 9:50 in the morning. And overnight, we have quite a big move on Wall Street. We have see a continuous pullback after setting a 2 months high. In fact, this is not only a 2 months high, it's the highest since April of this year. So we can see that from a low of 28,660, the market has rallied aggressively to 34,700 levels. And you can see that this is actually within a very short span of time. We are talking about mid-October to mid-December. So we can see that within this 2 months period, the market has actually rallied more than 6,000 points. I don't know, is it 6,000, but 6,000 points. Okay, so this is very, very aggressive in terms of magnitude of a move. Okay, so that gives rise to the idea that a lot of people saying, oh, the bear market is over and now we should be looking for a bull market. So I think basically after this week, I think the market will have to change their view again. Largely this week, the major highlight has been the CPI numbers. We have seen the release of the US CPI numbers already obviously seeing very gradual climb down in the US inflation based on the headline numbers in the CPI from 9.1% in June. Now we are looking at 7% odd, just barely above 7%. So we can see that the market is actually coming off in terms of inflation. So that gives rise to the idea that maybe the Federal Reserve can take its foot off the pedal and do not have to aggressively hike rates. So the market has been thinking about pivoting. For some reason, the market is always thinking about pivoting, whereas the Fed chairman has clearly tell us that interest rate is likely to stay higher and longer. And since Wednesday, after the last FOMC meeting for this year, in which the Federal Reserve hiked interest rate by 0.5%, he has also mentioned that throughout 2023, there will be no chance of a pivot. He will likely slow down the rate of the rate hike, but essentially rates are still going to go up. Okay, so that caused the market to pull back on Wednesday, and last night we have a killer of a retail sales. The market was expecting retail sales to slow down to negative 0.1%, but it came in negative 0.6. So that was a whammer going into the festive season. Okay, this is a big sign that the US economy is definitely in the beginning of a grip of a potential recession. So yesterday we can see that Wall Street actually went down rather aggressively. So Dow Jones high at 34,712 could be the peak for this round, and going forward we should be looking at much lower levels. In fact, the whole bear market has never been over. So possibly going into 2023, we can see the resumption of the bear trend. Okay. Over in the S&P 500, we saw the similar move, but this time we can see that the market has taken out a key midterm that support line. Okay, so coupled with the fact the market hit a high of a very round number at 4,100 and then break the support line last night, and we can see that this move itself has caused the market right now to be trading below so far the December. This is the lowest it ever been in December. So as we go forward towards the end of the year, definitely we're going to see much lower prices. I am already short the S&P 500, so I'm basically hanging on for dear life, because at one stage when the market was going up to 4,100, I was thinking maybe at some stage my short position will not survive, because I placed my stop just above the 41.20 levels, just above the September high. Okay, over in Nasdaq, we also saw that as much as the Dow Jones and the S&P 500 has been aggressively rising, especially the Dow Jones, the Nasdaq 100 obviously did not match the kind of magnitude of a rise. Okay, so throughout this 2 months period, the rise in the Nasdaq 100 has been very shallow. It was a 3-wave rebound, which I think may have already peaked at 12,166, and last night it broke the support line, and I think there's very good chance the Nasdaq 100 will be the first among the 3 major equity indexes in the US to actually take out the year low going forward. It may not have enough time to do it this year, but we still have about 2 weeks before the year end. Anything can happen. If this Nasdaq closed the year anywhere near the year low, I think it's setting the stage for a resumption of the bear trend that we have seen in Nasdaq this year. Okay. Now over in Hong Kong, we can see that the market has not reacted any violently yet. The market has eased off a little bit from where it closes yesterday, but not by very much. But still, we can see see that this is a three-wave rally. It came very, very close to 20,000 levels, but it didn't quite make it. I think all the while that the August high at 20,283 is going to be a barrier to entry. So if the market going forward breaks this near-term support line, it will actually mimic what we see in Wall Street. The one in Shanghai, this is the Shanghai Composite Index. While this market also have a rebound in three-way, but this three-wave does not look complete in my opinion. Certainly, you know, there is still the outside chance that the market may actually go towards my target at 3,300. Okay, if that's the case, I think that would be great, because you know the overall bear market in Shanghai is definitely does not seem to be over. But in the meantime, if the market first break the support line, then of course the chance of the market going to 3,300 may actually be reduced dramatically. Okay, so overall the bear market in equities is definitely not over. We can see that also in the Nikkei 225. This morning we have a major gap down, market opens and gap down, and it's already challenging the last week's low at 27,415. So going forward, I think there's a very good chance this week, or rather today, the market may actually take out this level of 27,415. Okay, and then that will set the stage for much lower prices going into the new week. Over in currencies, we can see that the dollar was relatively strong. Dollar yen this round managed to hold out at 133.62, and we can see the market is attempting to rebound. And last time we can see a very, very large move to all the way to 138, and then the market now is easing back a little bit. But by and large, I think the dollar strength is going to be very evident, because the Federal Reserve Chairman already said interest rate is not going to be cut in 2023, and he's still looking to progressively high interest rates. So that means interest rate in the US is still going to go higher, maybe not as high as what we saw over the last four installment of the Federal Reserve rate hike of 75 basis points. But still, the dollar is likely to benefit from higher interest rates. So going long dollar has always been is the main theme this year, and I think it will also be the main theme next year. Okay, so it means that conversely, all other currency would have to fall relative to the US dollar. So the fact that the sterling has managed to climb up to all the way to 124.45, okay, is already quite remarkable. I was actually short the sterling going into the CPI numbers. Unfortunately, that trade did not survive, and last night drop basically confirms what I suspect, that maybe the market is already coming to a top, and the high at 124.46 is possibly the peak for this round, because it also breaks a minor support line, and it does give the bearish view that much more credibility. Over in the euro versus the dollar, we have not seen the same kind of move that we saw in sterling. The high at 107.36 could also possibly be the peak for this round. And if the market does decisively take out the support line here and trade lower today, I think that will also give us the credibility that the dollar is starting to rise, and all the other major currencies are likely to fall back. Okay, and that is in line with the very bearish euro dollar outlook in the daily time frame. Okay, let's go into crude oil. Crude oil actually pulls back a little bit. Overnight, we can see the market is trading to a high of $77.75, just below this minor resistance line. So the market obviously observing this technical outlook in terms of this resistance line here. So yes, this I think it will be a temporary setback. Of course, the risk of market taking out $17 still remains. There are some people who are saying maybe the market will only bottom out at $65 or $66. So that remains a possibility. But if technically the market takes out decisively this resistance line, there's hope that the market will next go up to $83.34. If that being the case, of course, that will be very, very setting a stage for a very bullish challenge of the November high of the October high of $93.74. I'm basically still long the crude oil position. These are the only two positions I have right now, which is short S&P 500 and long crude oil. Over in the gold market, unfortunately, very similar to my trade in the sterling and the euro dollar, I was taken out of my short gold position during the night when the CPI numbers was released. And yesterday we have a significant pullback, and it's a little bit too late to sell at this current level now, because I think the risk reward does not look attractive anymore. I think the market is, if we continue to trade downside, okay, the target immediately will be 1,725. So I want to see some kind of reaction if the market eventually goes down to this level. If I can get some kind of confirmation the market is bottoming out and then we can see a reversal pattern appears, let's say in the 60 minutes time frame, I think that would be my cue to go back in again to buy gold. Okay, but the one that I really wanted to buy is silver, and overnight you can see that silver picks out at $24.13, not on yesterday but at the on Tuesday itself, and we can see that since Tuesday the market has not been able to go up to new high, and based on last night's pullback, there is the possibility the market may go down to test the $22. Again, very similar to the $1,725 in the gold market. If both comes to the same level, for silver will be $22, for gold is 1,725. If both come to this these two levels simultaneously and then develop a reversal pattern in the candlestick, then I would think that will be the confirmation to perhaps go in to buy some silver, because I thought in my opinion, the silver upside potential is a much more than the potential for gold to actually go up, because I think this move is going to be very explosive. The fundamental behind is, of course, we have a bit of a short squeeze. The whole market has been very short in precious metal markets, and I think fundamentally there is going to be huge demand for silver, because most of the delivery we saw last month end up in silver. Most speculator wanted to take delivery in silver from COMEX, and as I always mentioned, this the warehouse stocks in silver in COMEX is not very high. So I think if more and more speculators demand delivery, especially for the December 27 option expiration, I think there is a very good chance we can see another squeeze to the upside. Okay. Bitcoin also did not quite okay, Bitcoin actually have a rally last night, but it has been handicapped by this support turn resistance line. You can see market went up to 18,375, and then basically cannot go much higher, and it pulls back. So that this line here is now currently setting the stage for a barrier to higher prices, and the fact that market cannot trade above the 19,000 levels is already a sign that this market topside is actually quite limited. Unless the market can actually stays above 20,000 and then stay above 22,000, I think the case for lower prices in cryptos, especially Bitcoin, remains a very high possibility. Personally, I think the medium to long term, the Bitcoin may actually go down to 12,000, maybe as low as 10,000 before it stabilizes. So that being the case, definitely buying long, going long at 18,000 is definitely not a good bet. Okay. Over in Ethereum, we also saw the market also having problem to cross beyond the 1,350 levels convincingly. This round, the highest traded was 1,351. And then last night, it has a very minor breach of this support line. It does not mean anything at this moment because it's very minor. I need to see a very sharp drop to tell me that this market has already turned bearish. For the time being, I think there's still a possibility of $1,200 can still hold. Okay, so we have to watch the development in this space here. Crypto, Ripple, needless to say, has basically been sidelining. It has not been able to find the motivation to go either higher or lower, purely because there is this SEC lawsuit hanging over its head, and there's still no verdict. Everybody is waiting for a verdict. Some people were saying that we should get a verdict yesterday, but again, yesterday came and gone. Still nothing heard. We're still waiting for some kind of news from this particular Ripple Lab case, whereby the SEC have a case against the Ripple Lab, saying that their token is actually should be deemed as a securities, and if that's the case, that means the Ripple Labs is infringement of the SEC ruling. So in the absence of any kind of development, I think the market will simply drift to maybe the 35 to 36 cents level. Okay, so I think this range of prices remains a possibility that it can actually hit there. Binance Coin will actually come under, it's a victim of bad press because ever since the implosion of FTX, there is this sudden focus on crypto exchanges, and Binance being the largest, now come under the spotlight from the Department of Justice in the US, saying that they have, or rather accusing them of money laundering. So that is a very serious allegation, and that has caused major withdrawal from the exchange to the tune of $2 billion over this week itself. And Binance had basically freezed, okay, the withdrawal of this token called the USDC, which is a stable coin. So everything else being equal, I think the risk is to the downside, because if the Department of Justice want to rein in the crypto space, I think they will definitely go after Binance, because now they are the only kingpin. Okay, it's almost like a monopoly right now. Dogecoins again has been drifting lower and lower ever since it traded up to 11 cents, and last we have seen is just under the 9 cents level. And overall, the structure looks still constructive. I think it can still basically go up, but again, this is a meme coin, and there is no fundamental behind it, so we have to take it with a pinch of salt. Cardano has basically been living on borrowed time. It has been, trading lower and lower. We can see the lowest this one was just under 30 cents, and the current level is exactly 30 cents. So there's a risk that it will break this 0.296 cents, which is the low for November. So going forward, it does looks really bad for Cardano. For Solana, based on percentage term, it has done quite well, from as low as almost 11 cents, $11, it has gone up to $15. So in percentage term, that is quite a big move. Okay, but by and large, you can see the market is also flatlining and waiting for some kind of impetus. That's all I have for you for today, and I would like to see you again on Sunday. If you can join me on my webinar on Sunday at 8 p.m. Singapore time. If not, then I'll see you on Monday. In the meantime, take care and enjoy your shopping for the Christmas season. Bye-bye.